Hi everyone. Welcome back to AI Finance Buddy. Today, we're diving into a market that's sending mixed signals. Tech stocks are showing resilience, while rising trade tariffs and high interest rates are causing some concern. What's really driving these trends? In this episode, we'll explore today's biggest market movers, including Rheinmetall AG, which surged 11% on news of increased defense spending, and Alibaba Group, riding high on AI advancements with a 4% jump. We'll also discuss how Walmart Incorporated's upcoming earnings report could impact consumer sentiment amidst inflation worries. Plus, we'll break down a key finance lesson on automating your savings and investments, a simple strategy that can help you build wealth over time. And don't miss our inspiring success story of Elena Popescu, who turned a modest investment into a significant portfolio through patience and smart choices. Stick around until the end, where I'll share my personal investment strategy, the real trades I'm making today to navigate this dynamic market. Let's get started. Chapter 1, Today's Market News. Today, the market sentiment is mixed, with tech stocks showing resilience while concerns over rising U.S. trade tariffs and high interest rates weigh on investor confidence. The technology sector is buoyed by strong AI advancements, particularly in China, while defense stocks are gaining traction due to increased military spending in Europe. Meanwhile, the Reserve Bank of Australia's recent rate cut has sparked interest in Australian equities, but broader economic concerns persist. Now, let's look at the top 3 biggest stock movers. First, Rheinmetall AG, a key player in the defense sector, surged 11% today as European leaders discussed a new defense spending package to support Ukraine. This potential budget increase could significantly boost military production capacity, benefiting companies like Rheinmetall. With defense budgets on the rise, this stock is positioned for growth. Buy score, 70 out of 100. Next, Alibaba Group, the Chinese e-commerce giant, saw its stock rise by 4% as investors anticipate strong earnings driven by its AI partnership with Apple. The excitement around AI is palpable, akin to a tech renaissance, and Alibaba is at the forefront. However, competition from rivals like Baidu could pose risks. Buy score, 75 out of 100. Finally, Walmart Incorporated saw its stock climb 3% ahead of its earnings report, which is expected to provide insights into U.S. consumer health amidst rising inflation. As the largest retailer, Walmart's performance is a bellwether for consumer spending trends. However, potential impacts from proposed tariffs could affect margins. Buy score, 75 out of 100. Today's market activity suggests a strong focus on technology and defense sectors, with investors keenly watching for earnings reports from major players like Walmart and Alibaba. Upcoming events, including the U.S.-Russia peace talks and Federal Reserve minutes, could further influence market dynamics. Insightful takeaway: as geopolitical tensions and economic policies evolve, staying informed on sector trends and upcoming earnings will be crucial for navigating the market effectively. Chapter 2, Simple Finance Terms Explained. Ask price: this is the price a seller wants for their stock, like the price tag on an item in a store. If you want to buy it, that's the starting point for negotiations. Risk tolerance: this measures how much financial risk you're okay with, similar to how adventurous you are with trying new foods. If you're willing to try spicy dishes, you might be open to riskier investments. Long position: this means you own a stock because you believe its value will rise, like planting a seed and waiting for it to grow into a big tree. You're in it for the long haul, hoping for a fruitful outcome. Chapter 3, Top Stock Pick of the Day. Today, let's talk about why Taiwan Semiconductor Manufacturing Company, TSM, is a great investment choice right now. First off, TSM is the biggest semiconductor foundry in the world, which means it makes chips that power everything from smartphones to cars. They're doing really well financially, with strong earnings and a solid profit per share. Plus, they have very little debt, which means they're in a good position to handle any bumps in the road. Their current assets are more than double their current liabilities, showing they can easily cover their short-term obligations. And when we look at how they're valued compared to their earnings, it seems reasonable. However, keep in mind that the semiconductor industry can be affected by things like global supply chain issues, changes in technology demand, and economic slowdowns. So, while TSM looks promising, it's always good to stay aware of these potential risks. In summary, TSM is a strong player in a growing market, but like any investment, it comes with its own set of challenges. Happy investing. Chapter 4, Core Long-Term Strategy with ETF. Imagine you want to invest in a whole garden of flowers, but you only have a small pot. Exchange-traded funds, ETFs, are like that pot. They let you buy a little bit of many different stocks all at once, making it easier and cheaper to invest for the long term. Now, think of the MSCI World Index as a map of the world's best flower gardens. It includes companies from 23 countries, helping you spread your investment across the globe. This way, if one garden doesn't bloom, others might thrive, giving you a better chance for growth. Together, ETFs and the MSCI World Index make investing simple and smart. The MSCI World Index is like a big basket that holds stocks from companies all around the world, helping investors see how the global market is doing. Recently, there's been some buzz about the MSCI World Climate Select Index, which focuses on companies that are making efforts to be more environmentally friendly. This is important because many investors want to support businesses that care about the planet. Also, the Amundi MSCI World UCITS ETF tracks the MSCI World Index, allowing people to invest in a wide range of global companies without buying each stock individually. Plus, the overall MSCI World Index is showing some positive movement, with Wall Street looking to gain this week. So, it's a good time to stay informed if you're thinking about investing. Remember, investing can be risky. Stay patient and only use money you won't need soon. Chapter 5, Quick Financial Lesson. Setting up automatic savings and investments is like having a personal assistant for your money. Imagine you're trying to save for a vacation. Instead of waiting until the end of the month to see what's left, you can set up an automatic transfer from your checking account to your savings account every payday. This way, you're saving without even thinking about it. Let's say you decide to save $50 every 2 weeks. Before you know it, you'll have $1,300 saved in a year. Plus, you can also automate your investments. Many apps and platforms allow you to invest a small amount regularly, like $20 a week. Over time, this can grow into a nice nest egg. Here's a simple tip: start small. Automate a little bit each month, and as you get comfortable, you can increase the amount. This way, you're building good habits without feeling overwhelmed. Remember, the key is consistency. Chapter 6, Real Stories of Financial Success. In the heart of Bucharest, Romania, Elena Popescu, a dedicated professor, embarked on her financial journey in 2010. With a modest salary, she began investing in local stocks and mutual funds, focusing on companies like Banca Transilvania and Romgaz. Over the next decade, her disciplined approach and keen research paid off. By 2020, her initial investment of just €5,000 had grown to an impressive €30,000, thanks to the booming Romanian economy and her strategic choices in ETFs like the BET index. Elena learned the importance of patience and diversification, proving that even a small, consistent investment can lead to significant wealth over time. Her story reminds us that financial literacy is key: start small, stay informed, and watch your money grow. Remember, it's never too late to take control of your financial future. Chapter 7, Summary and Personal Investment Strategy. Thank you for joining us today. Let's quickly recap what we covered in each chapter. In Chapter 1, we explored a mixed market sentiment, with tech stocks thriving on AI advancements and defense stocks benefiting from increased military spending. Key movers included Rheinmetall AG, Alibaba, and Walmart, all reflecting the current economic landscape. In Chapter 2, we broke down essential terms like the ask price, which is the seller's desired price, risk tolerance, measuring your comfort with financial risk, and long positions, where you invest with the expectation of future growth. In Chapter 3, our featured stock, Taiwan Semiconductor Manufacturing Company, TSM, stands out due to its strong financials and minimal debt, making it a solid choice in the growing semiconductor market, despite potential industry risks. In Chapter 4, we discussed how ETFs allow you to invest in a diverse range of stocks, like the MSCI World Index, which helps spread risk globally. This approach is especially beneficial for long-term investors looking for stability. In Chapter 5, we emphasize the importance of automating your savings and investments, making it easier to build wealth over time without the stress of manual transfers. Consistency is key to achieving your financial goals. For today, I am adding $15 to my MSCI World Index investment and experimenting with $10 in a fractional share of our suggested best buy pick, TSM, both with 1-to-1 leverage to demonstrate the importance of cautious and diversified investing. Before we wrap up, let's bust a common myth: the stock market is just for rich people. The truth is, anyone can start investing with small amounts thanks to fractional shares and index funds. Building wealth is about consistency, not just starting with a lot of money. Take a moment today to analyze your grocery bill. Could you save by switching to different brands? Small steps lead to big financial success. As we conclude, remember to do your own research, test strategies, and consult a financial advisor before making decisions. If you enjoyed today's video, please like, comment, subscribe, and turn on notifications to stay informed and support our channel's growth. Join us for the next episode, where we'll continue building your financial knowledge. We'd love to hear your thoughts, questions, or topic suggestions in the comments. Thank you for watching, and remember, enabling notifications ensures you never miss valuable financial insights and market updates.